So the requests that we had when I was asking questions had quite a few things around retirement or financial planning. And I'm sure some of that has to do with the grant and just being able to think about, pieces that we might not have been able to do as easily, especially in family childcare prior to this moment. But the more I got to thinking about it, that is part of what we're going to talk about today. But the more I got to thinking about it is there's more to planning for retirement than just figuring out, okay, where do I go to put the money? So I really backed up and I started thinking about this idea of resilience. And that's been a big topic with a lot of things that Equipped has been doing recently. And I wanted to frame, how do we think about all of financial planning as resilience? Now, I know that's kind of a stretch right now, but we're going to get into that a little bit more. We're going to talk about how we take steps towards financial resilience. And we've got a little bit of a self-assessment. And I have a to-do list for you. And some of that we're going to cover today. And I included a handout that says financial to-do list in an email, which those of you that are with the association today wouldn't have that in person, and that's fine. The reason I say that, just so you don't feel like you've missed out on a handout, is because it's actually a follow-up document and it follows the same exact agenda of what we're going to talk about today. With that to-do list, we're going to decide something you do when you leave here and next steps. So I'm going to jump right into this. I'm going to stop sharing for just a second. And I had this set up as a poll, and rather than a poll, because that works best when you have a huge group, I'd rather just ask you and y'all can talk to each other about this, or just give me a thumbs up, because this one is a really quick yes or no. Overall, do you think financial planning is important? And that's basically a yes or no question, right? Miss Anita gave me a thumbs up right there. She's ready.
Can she see me?
Miss Peggy, I know you're there too. I'm so glad. How are you?
I'm fine. I'm taking care of baby. I'm listening. I have to put you on mute. I've got a
feedback. You are always multitasking. I'm so glad that you're here today, though. So I'm just going to keep talking, and I know you're there in the background. But if you have a question, please don't hesitate to jump in.
All right. Thank you.
So I think we'd all agree, right? If somebody just asks you that flat out question, is financial planning important? Most of you are going to say, yeah, or you wouldn't have asked to get information about it, right? So here's the tricky question. On a scale of 1 to 5, and I can see a couple of y'all out there, if you just hold up a finger or however many fingers, with a 1 being not so great, and 5 being, I am set, I know where I stand, and I have a plan for my future, where would you say you are in financial planning? 1 being the not so great, and then the 5 being, I don't even need to be here. I got 2s, 3s, 1s, 2s, 2s, 3s. So kind of in the middle, right? So here's the big question. And you can talk to each other about this, or turn the mic off and we'll just chat for a moment, whatever, Nicole, as long as I'm not bumping you around the room to be the Vanna White of the day. What are some reasons you think between that discrepancy? Like, if we know it's important, everybody said yeah, but then we say our own process is like in the 2s and 3s, is if I had to pick an average. What are some reasons that we might not be saying we're at a 5? Oh, I'm going to unmute. Well, there you go. There's Nicole. Let's see if I can hear y'all. Sorry.
Okay. I'm going to be the unmute person.
Yeah, you can leave it off if you want to, Nicole, and I can mute on this end if background noise gets crazy.
Perfect. That's great. Well, I know, Anita, I think you had something to share.
I said for me, I think I just didn't know which direction to take. Like I have money saved in a savings account, I have money in a money market account, but you don't, I mean, it's just there. You don't, $4 a month, interest, but that's it. I mean, so as far as like the 401k or some of the other big areas, it's, when I work for a company, a large Fortune 500 company, it was just there. So you just, the pre-deposit before got your paycheck, but just kind of being out there on my own for 27 years, I just didn't really know which direction to take with that, to be honest with you.
Definitely. And for the folks that are joining in too, I raised a question. I think every single person, when I said, is financial planning important? Almost everyone says yes, or you wouldn't be here. But when I ask you to think about your own practices and where you stand on a 1 to 5, most folks are in the 2, 3, somewhere in the middle range, if I had to average. And I was asking, what are some reasons that might be? And what Anita just shared was, to me, and please correct me if this isn't in the right direction, but it has to do with where does it go and what is happening with it? And now that I have it, what do I do with it? So some of that might be in a comfort bucket, but some of it might be in a knowledge or access to, that deeper financial piece, because I don't know about y'all, I talk about these concepts, but I'm not a CPA. Some of this I can't explain either. I am here to provide resources and kind of give you the background to lead you in the right direction. But I can't solve it for someone else. So that's part of it too. And I don't know if any of the folks that are in the background that have joined virtually, if there's anything you want to add to that, some of the reasons that you might not be at a 5 when it comes to where you want to be in your financial planning practices, please jump into. I'm very conversational, and technically we have a small enough group to be able to do it that way. I wanted to share, because what you said just came up. I'm gonna make sure I come to the right one. Okay, so some of those reasons, and some of that actually, Anita, I see on here of yours. When I talk to family childcare home providers, especially, they range from, I don't have money, I don't make enough money. I mean, how are you supposed to save if you're not making enough? Some of the other pieces are, I need this first before I can start saving. I'm not organized, I don't know how, I avoid it. It might be that it's so scary, or I'm so far in, I'm not exactly sure how to get back out. Access to resources. So I think looking at this list, you can probably all find something that connects or resonates with you. And this is where I really want to tie this to the idea of resilience. So I want you to think for just a second about a time when you faced a really difficult situation in life, even if that has nothing to do with a financial disaster, but you made it through to the other side. Whatever that hard thing was that you faced, I want you to really think about and embody and put yourself there to say, what were you thinking and how did you feel when you were in the thick of it? It's rough. I could probably name a ton. For me personally, I've been through a home foreclosure. This was a while back. But it was terrifying. Now, I didn't have a child at the time. I was young, and there's a whole lot more to the context of that story. But there's a lot of emotions that put you in a situation when you are in a difficult moment. So what skills helped you get through that? Because you made it to the other side. You are still here. You have shown up today, and there's something to be said for that. And my other question was, were you able to do it on your own? And I want to pause there for just a second and see if anybody wants to share out anything. And I don't expect anyone to tell a story of something you're not comfortable sharing with a group, but more about the emotions and if you made it through on your own.
For me, I can think about a couple of those things I have had to go through, and the emotional roller coaster, because you have those highs, you have those downs when you feel like I'm just not going to get through it. But then when you consult with someone or talk with someone, you kind of get into a peak of coming up. And then once you further consult whatever the issue is, you kind of get over it, you kind of come back into a calm and peace. So emotionally for me, that's kind of like a roller coaster depending on what the situation was. And then I guess I would have to say, having someone to talk to, having someone to give me the insight of what I need to get the information I need to better myself in that situation, if that makes sense. Having someone that knows what I didn't know or can say the right words to kind of help me, you know, get to that next point, get out of the disappointment and start getting over into the new norm, and that you can get through this and get some understanding.
And what I heard in that, Zanetta, was that there's some skills that you had to work through and recognize and use that were internal to you. Someone else couldn't give that to you. But at the same time, I also heard other people mentioned in that. And I think that's really interesting. And one of the reasons I chose the handout, and I'm going to share it in the chat for those of you who are virtual with us. It's one of the reasons I chose. I have too many screens up, bear with me. The resiliency resources assessment quiz handout that Nicole had for you all. It's one of the reasons I chose that. And I think I will not turn into political Ashley, but we have to acknowledge that we live in a society where finances are very much a secretive thing. And yes, in the chat, you will get all of the handouts and copies of the PowerPoint and everything afterwards too. It's secretive, but you're also made to feel like you're on your own. We have this idea that if you work hard, you will make money. If you work hard, you will be successful. You are able to be financially stable. In reality, our financial health and resilience is very much dependent on not only a job and money, but our emotional skills, our knowledge, our resources, our access to peers, our access to friends, family. So I want y'all to take a second, and I'm going to put the link for this in the chat as well. If you have already done this, it's totally fine. If you have not, it's a front and back. And it wants you to score it on a 1 to 5. I prefer just a plus or a minus to give you a visual. Sometimes I think these things that try to give you a total start getting you thinking too much about where you stand in a specific area. So whatever you feel most comfortable with is what I'd prefer you to do. You can keep looking through this, but I do want to open it up and ask you what you notice about these 3 sections as to how they're broken down as being part of financial resilience. Like, have you ever gone to do anything with your bank and been asked about your health? Or if you have friends? Like, what do you notice about these sections?
Never thought about friends as a resource, but I guess it could be friends or family. I guess it could be. I never thought about it.
Yeah, that was good too.
Not as a defense, you know.
Right.
So because I said no, and then I thought about it, and I thought about it a little deeper, and I was like, well, yeah, I probably do have close friends or first cousins that could be a resource in a situation, but on the surface, I thought, no.
Yeah, right.
Yeah. But perhaps.
And I think that's pretty typical for a lot of folks. And families operate in different ways. And I just wanted to bring up too, not everything on these lists is going to be applicable for where everyone is in their life. But what I thought was really interesting, so let me pose this. Was there one section that you feel like you had a whole lot more pluses in? Like, where would your strengths fall out of the 3 sections?
Financial
Or
was my strength. But
which one?
My strength was financial resources.
Okay.
My weakness was personal resources. They had held myself accountable. Because if I have to buy papers right now in my house, I would have to call my sister. Right. Because she keeps everything organized for me. Where is this and where is that? So now I need to make myself more responsible for things.
Oh, wow. Is that Miss Dolores?
Yes.
I recognized your voice. That's an incredible insight to see out of those 3 sections. I didn't predict that one coming up, but it makes total sense. I think it does because so many folks tell me if they do have a CPA or someone that does their taxes, they often just keep things organized but hand it off. And at the end of the day, do you go back to see, was the time space percentage used? Were deductions put in as they should be for family childcare? Tom Copeland will hammer this in our heads. Taxes done wrong for family childcare is one of the biggest ways that family childcare homes lose income. So I'm gonna move us forward with this, but what I thought was interesting is that these 3 areas are all interconnected. The more I got to looking at financial resources, community resources, personal resources, I said, okay, so we're here to talk about finance. What's the one thing that you need to have just in your business in order to even begin doing these things? Starts with a B. Thank you. And BAS class people know budget. Okay, I was making sure that restart notice was not right now. Sorry. Okay, so you have to have a budget. Well, how do you make a budget? If you are coming into this as a family childcare home provider and you don't have access to community resources, local organizations, business support, your personal resources might be access and understanding the technology. You could always write one on a piece of paper, but if you don't have the understanding of the financial terms or knowing where you are you going to get the budget? So the more I thought about this, is it's really, really interconnected. And I wanted to highlight that because especially today, having just the joy of being able to say that the association is here. You are a group of peers who, even if someone is not feeling confident enough to call Ashley, who you know does all things business for family childcare, or at least can connect you to that you have a group right there together to begin being able to support each other or extending that support to other family childcare home providers in the community. So I think it's very important just to see how interconnected all of these pieces are. And with that being said, we're going to move into the meat today on financial resources, because that is indeed the main purpose of what I wanted to share. But I really wanted to tie it to this notion of being able to know where to go, who to talk to, and if you don't, also having the confidence to be able to ask for help, whether that is me at Equipped or peers in your group or that family member or whoever that might be. So with that being said, I'm going to send you a to-do list afterwards. And I know you're like, oh my goodness, a to-do list. It lines up with this entire series of what we're going to go through real quick. But there's 3 things that I want everyone to do, no matter what other things you have on your list that you're thinking about. If you're not doing this already, I want you to create or start working on creating a budget, both for the program and personally. A lot of times folks will say, well, I have a budget for the program, but when you really start looking at it, it gets some personal stuff mixed in. And a great way, which I've been saying this a lot lately, to help you with those 2 separate budgets is to have a separate account for just your business. And you're going to pay yourself first. Now, you're all saying, oh, yeah, I know that. I hear you say that all the time. But if you've already got the budget, I want you to do just a deeper budget look. Some folks do monthly, some folks do quarterly, especially now with getting a quarterly grant. However you approach that, just remember that quarterly grant piece of being divided up if you're doing a monthly budget versus quarterly. And knowing where you stand is identifying that overall surplus or deficit, which means, are you in the green or are you in the red? And it's really just about knowing where you stand and then moving towards assessing what is really coming in and what's really going out. Now, here's another tip, and I don't know if I've really gotten this deep into the budget idea before. If you have a budget for your business and a budget for your personal expenses, I would love for you to start making sure that your business budget has a time space percentage calculated into that for those have to pay things. And I guess an example of that would be, and if folks here are not familiar with the time space percentage, it's a number that's very important for your taxes. I'll send some information afterwards on how to get that number, but it represents not your whole house is used for your business, right? Just parts of your house. And then not all of your 24 hours a day is used for your business, even though sometimes it might feel like that. The time space percentage just represents what amount of your home and your time are used in your business. So what I mean by that is just make up a number. Let's say you have a mortgage payment that's $800 a month. You know that your time space percentage is 40%. So on your business budget, I want you to put the 320, which is 40% of 800 on that budget. And then the difference, of course, would be on your personal budget. Why might I suggest doing that? It's tricky to wrap your head around, isn't it? Taxable income. We're figuring out that taxable income number at the end of the year. And the reason I suggest going to that level, if you're ready to with your math right now, is simply for the purpose of really keeping an eye on what these grants are doing to your overall income and how much you are actually getting to write off that's a total expense or how much of that is not a total expense. If you've got questions about that, make a note and I can follow up with you about that after the fact. but it does help you keep in mind what is definitely getting taxed or written off as a deduction, and then what I am still responsible for at the end of the day. And for those of you that want to get started with a budget or even want to think about what are some things that I might do differently, I've included links in the PowerPoint for you all to go exploring later. I will say, remember, with the resources I send, not all states operate under the same licensing requirements, that sort of thing, regulations. So if you see something mentioned that's state specific, these resources are really more for what is in my budget and what can I take out of this that applies to me. So when you talk about opening a second account for your business, some of you are like, yeah, you've been telling me, I already did that. I want you to stop and think, how well is your account, or are your accounts, plural, working for you? Well, what do you mean? Well, not everybody needs the same things out of a checking account. And there's accounts these days where you've got perks. You might get cash back for certain type of purchases. Some places have integrated software that will link your account with QuickBooks. Some places have photo check deposits. Would that be a major convenience in your life? Are you getting fees through ATM usages? So with that, I just mean take a step back, see if your checking account is working for you. If you're in the space of trying to find a checking account, think about what you would have as your ideal services, and then start looking for the place that's best going to match that. If that's over the top for you, I always say try self-help first. They are phenomenal, especially with giving you all the resources and tools and support for small businesses. I'm just going to do this one quickly because I'm sure you're like, you have hammered this in our heads, Ashley. But so if you've got that business account, that's where ideally we want your grant deposits to be going, and income. So if you have other income that you want to use in that business account, it would be going there. But I want you to pay yourself out of that so that you are indeed getting paid wages for the work that you're doing. And that goes into your personal account. The only part that I want to remind you is that in this personal account, that's where you can spend that money on things that the grant may not qualify for. So, let's say, I don't know, you're adding on to a back room in your house because we know that's not something that we could do. This is where that would come from. The reason I put the deductions down here under your personal account is because those things are still really important on your taxes. The division just doesn't have anything to do with that as far as the grant dollars go. But we want you to pay yourself and then move that to a personal account just to have a record of paying yourself out of the grant funds. So once you start looking at that budget, there's a couple things that could happen. You might need to, well, let's just say this. Is there a deficit, or am I looking like I'm really close to writing that line? Obviously, there's two different things you can do. It's either cut back on your spending or increase what you're making. And I think we're all pretty familiar with that concept. However, there's a few little things I did want to point out that we don't always go to first. With the reduced spending, a big thing for some folks is having to do with debt, especially incurred from COVID or even prior to COVID. With the grant funds, if you pay yourself, you could put that entire chunk towards a credit card if that's what you chose to do. Now, remember, you are going to be responsible for the taxes on those dollars. And that's not necessarily a write-off unless it's a business related. We'll you see where that could go. I'll stop with that one there. But I'm just trying to point out that this is one of those rare moments where you're getting a chunk, and it's really important to assess what is most important on that financial ladder of being able to get into the green on my budget, because that's where your continued financial resilience comes from, right? If you're constantly hitting close to that margin, you're going to continue having a little bit to put towards something else. But these chunks, which are the easiest way to get out of holes, think really about where is that going to benefit me the most. So the debt piece isn't going to apply to everyone. But I do want to point that out, that this is a moment where that is a potential solution to help you knock out some of the debt. But think creatively. I'm sure in the association, y'all may do this already. What are some ways you can share or trade services with other family childcare homes, especially in terms of substitutes, vacation weeks? I don't know. I'm throwing ideas out there at y'all to start brainstorming. What are some ways that I can cut back on what it is that I'm having to pay for? The income piece. I know we talked about this years ago in Bass, but have you looked at your annual fees that you might need to increase or implement? What are you charging compared to other folks around you? Any extra services that you feel like families might be able to or want to or need that you could provide? Charging monthly. I know a lot of folks don't do this, but if you're charging families monthly for tuition, not all months have the same number of days. So you're actually missing out on about 4 or 5 weeks worth of income if you were to calculate a weekly rate instead. So that's one place you might be able to just look at and see what would this change make overall in the income. And reassessing your past 3 years of taxes. Were they all done accurately? Time, space, percentage, because that's the biggest place that refunds come into play. And then I have to give this story just because it's Tom Copeland's and I love it. A provider he works with always picks one child every year and calls it her retirement baby. And every bit of income from that one child for that 1 year, she pretends as if she doesn't even get, and that goes into funding her backup plans. So do you have a retirement baby? That might be worth something you think about as well. I think many of you know the importance of liability insurance, so I won't sit too long on this idea. But homeowners and liability are 2 different types of coverage. And this example is another one that I love from Tom, and it's not completely accurate, but if some child falls, you get sued, you go to court, and the judge awards the family $300,000 in settlements. Without liability insurance for your business, you're going to hire an attorney who you have to pay, even if you end up winning the case. But if you don't, that $300,000 in settlements has to come from you. Meaning liens. Do you have a house? Do you have a car? IRAs, things frozen until things get paid, versus liability insurance, which is what is there to foot that bill. Again, I cannot highlight enough. If you have it, just go check in with it, reassess it. What are you covered for? What are you not? But your grant funds can cover the cost of your premium. It is a business expense. So I won't read it all, but this whole slide is full of resources related to insurance, whether it's the liability insurance, which I've included a link for Markel. I know some of y'all actually use them, but they're one of the biggest and most known family childcare liability insurance companies in the US. Some things to think about with life insurance. how much do you need? And then what happens to your business if you were hurt or sick or in an accident, or we have to mention if you were to pass away, what happens to all of this? And there are short-term disability options too for those who are self-employed. So knowing that not all of this is going to apply to everyone, I pulled some resources for you to help you think about, well, how much do I need? So there's a link there that you could play with, some resources for the short-term disability, and then an overall resource of more information you would need to think about for business succession planning. And that's everything from what happens if I'm in a car accident and out of work for 6 months, to what happens when I pass away, to my home, my business, what do the families do? Where does all that go? So those links are included here for you as well. And this was our big topic, y'all, thinking about retirement. Ugh. Kidding. It's exciting, right? It's exciting because it's grant time. It's grant season. So what do you do with some of what you're getting? Another thing I want you to think about is, how much do you need? That's completely different for every person, depending on where you are, your spouse's situation. So there's a link here for you to kind of start playing with, here's where I am today. Here's where I want to go. Tom recommends these 3 specifically for family childcare, and I'll tell you why in just a second. But do remember, I feel like 2 of the 3 do not charge a fee for a traditional IRA. But as I said, depending on what you find out with your calculator as to what your needs are, and once you start looking at these 3, some may have fees associated. But remember, your grants cover that because it's a business expense. Excuse me, back up, erase that. This is not a grant coverage piece. This is a tax deduction piece. I'm getting ahead of myself. This is where I wanted to point out specifically. Don't get confused on that. I was on a roll. The 2 things that would be most applicable to you is a traditional IRA or a Roth IRA. And here's the only big difference that I want you to think about for the 2. The traditional IRA is probably where most of you even would want to lean, because you get the tax deduction now for putting money in it. So I'm going to pause and give an example. You know, up on that slide where we put that grant in that account and you paid that check to yourself. Your check has now gone into your personal account. You can take that personal account and write that same check, put it in the traditional IRA, and you get the tax benefit of that being deducted now. Do y'all follow me on walking through those steps? Okay. So the other side of that is the Roth IRA, which means you're going to pay taxes now on those dollars. But when you withdraw it, you do not pay taxes on that money. So you say, oh, that's a easy one, right? I want it a deduction now. Well, because of the grants, that might be a great way for you to think about it. But what does the tax look like on it when you take it out 10, 20, 30 years from now? There is a calculator here that Tom Copeland has shared. And what this one does is show you the difference between, if starting today I use a traditional IRA versus a Roth IRA, where does this put me in X number of years? Because that's another one that's going to depend on how long the money is there, how much you're trying to put into it. So it really comes down to, is the tax deduction better today? Or is the tax deduction better when I start taking out the money? And again, that's not one that I could answer for anyone, but you're going to have to use some of the tools to look at that. And I've also given you some of the locations of online who to talk to. Now, another thing I wanted to point out I learned this not too long ago. Social Security benefits can completely change depending on when you decide to start using them. This is an estimator that you can use online, and it can show you the ideal age for you to start drawing Social Security and get the most money that you can possibly get. So I put that here with retirement because I think those two obviously have to go hand in hand. If you see that there's a major difference in when you start using Social Security and say, well, I want to wait until then, that could change how much you need to put in an IRA and vice versa. So I would think of those two things together. Look at your Social Security estimator first, unless that does not apply, and then look at how do I balance that with an IRA. And the last thing I was going to say is legal business practices. And this is another one that I think the grants have just, I don't know. We just need to make sure that we're thinking about. And that is how we pay and document our employees. If folks say, well, they're not my employee, the definition from the IRS is that if you have any direction over what that person does in your business, they're basically an employee. We have to report them in certain ways. And why should we do that? You're like, yeah, it's not that big of a deal. They're only here once a month, maybe, if I need them. The people can actually report you as a business owner because they're not getting documented to be able to contribute to Medicare, Social Security, that sort of thing. And the penalty for that is way worse than if you were to kind of say, I just learned about this and I need to fix it. Think about it kind of like self-reporting. I'm going to call and tell you that I did something that I just learned and I'm trying to fix it. It's a law. And I've included some links about what's required in North Carolina when you do take someone on in your program, and also the link to the IRS website about it. But there's also good news. And I'm going to skip. And I just talked about that. So I sent Tom an email too. I said, I know what I would say, but what would you say? So I just copied Tom's response so you would know that this is what Tom said. That you should start doing this correctly moving forward and as soon as possible. Know that you can amend your tax return back for 3 years. And since it can be complicated, he suggested you talk to a CPA for help doing this. And I said, yeah, I completely agree with that. I would not suggest taking that on yourself either. But there is a voluntary program that the IRS offers if this applies to you. I won't go too deeply into it, but it's basically you're entering into an agreement with the IRS that from today moving forward, I'm going to classify correctly. And you are agreeing to pay 10% of the liability for the most recent tax year. So what might be different though, since it's 2022, about where we are at this historical moment in time than like 5 years ago? How many of y'all had substitutes or teachers and staff running around all over the place last year? It could be a worse time in the world to actually think about this and do it, right? So I just wanted you to know that there really is a program, and for you not to be totally afraid of what's required and what do you do that can work with you if you're in this moment to figure out how to do it the right way moving forward. A few reminders related to taxes and business practices. Some folks have used grant funds to cover tuition. So let's say you have a family that you're trying to help and you covered half of their tuition for a month with grant funds. That's not a deduction. You're reducing your taxable income, but you're not getting that tuition out of pocket from the family. So it's just like the money is still sitting there in your program. Does that make sense? I just wanted to clarify, not saying that this is like a misconception that's out there, but it's something I've come across that got me thinking more. If you're unsure about a purchase with grant funds, just pay yourself first and then use it from that account rather than trying to run down rabbit trails and get an answer. I would move in that direction if it gets that unclear, because if it's not straightforward, pay yourself and do it in that way. For those of you that might have received PPP funds, and you will know if this applies to you, that is not taxable income as far as your taxes go. Receipts. I think most of you are aware of this one. It can be a handwritten note with the date and the amount you paid and what the item is. Because if it is considered regular and necessary in the business, I went by a yard sale and I saw this phenomenal bookcase that would be perfect in the playroom, and I paid $10 for it. You can take a Post-it. And if you are very organized and you want to take a screenshot on your cell phone of the Post-it beside the shelf, you could do that too. But that counts as far as collecting receipts for tax purposes. And I'm going to wrap this up with, most people might want to think about a CPA that is familiar with family child care home business practices. It's really, really different. Like, you can call and say, do you know how to do family child care home taxes? And they'll go, yeah. And you end up with just a Schedule C, deductions, whatnot. It's that time space percentage that I think a lot of folks don't wrap their heads around. So it's going to look small here. Oh, it was on this one. I've given you the list. If you want to assess your own CPA or call around to find a CPA, of the questions to ask and what answers they should give you. So you will get the PowerPoint. But if they give you a different answer than what is on this list, we might want to reassess who you're using for tax purposes. There is also a link in here of 2 different places that has the National Association of Enrolled Agents, and that is for family child care, for you to be able to go to, and some articles from Tom about things to think about and what to get together before tax season. So that was a ton of stuff from me just thrown at you around, now what? What do I do? Financial resources, retirement planning, set aside money. It's a lot of information, right? But I want you to scale back again and think about, it's not just about the dollars and cents. Your context is going to matter. And there's also community resources, and there's also personal resources. So thinking about that, I wanted to throw out just like a discussion question or two to really say, like, what would I do? Let's say you have a spouse, because this is a situation I think might apply to some people, and they have a 401k at their work. And their 401k is going to match dollar for dollar up to a certain amount of what they put into it out of their paycheck. Do you open your own IRA? Or what might you want to do?
You could put that, yeah, you could put that funds in your spouse 401k.
If his company, if her company's gonna manage.
Yeah, if it match. Use the funds to put in your spouse 401k.
Any other thoughts? There's no one right answer.
Especially if you love that baby.
What did she say?
She said, especially if you love that man.
So it's tricky, right? I'm gonna keep rolling with that comment and say it depends on who all the beneficiaries are listed as. I'm kidding. So what I wanted to highlight with that question is it always seems like there might be like a gut reaction answer. Oh, a match. Yeah, that is good. So based on though everything I shared with tax deduction now versus tax deduction later, and you getting grant funds, and then the grants can be all you, I would say it's time to sit down with a calculator, and not a calculator to do it yourself, but some of the links that are in the PowerPoint to see what really is the smartest outcome. Instead of just saying, well, it's available, I'm going to put my money in it with his because there's a match. I don't know that that's always possible, but what you could say is you increase your elected amount at work all the way up to that max percent. And then we'll just use my extra income to make up for what we're losing from your paycheck. That could be one approach. You could look at the big picture and realize you could do that and have some go towards a separate IRA just because grant funds are here. And how are you using them and what do you need to use them for? You could realize that your calculator might show more income of his going towards it than yours and his in the long term. I'm taking it out in 3 years. It all depends on the context, I guess, is what I'm hoping to hit here. The scary part and the part that sometimes makes us apprehensive is it does require a little bit of brain work. Are you there on your own though? No. And I say that because you have equipped. I don't always have an answer for something because I'm not the CPA, but you know that I will sit with you with a calculator. The calculator's online, not a manual one. Kidding. And I can help you make some connections to say, hey, let's talk to this person. Hey, let's talk to that person. If it's not me, it's Tom. Did you know that Tom will answer an email question for free, like about taxes and stuff? So you can ask Tom. He is the nation's guru for family childcare home business. I've included the resource of a CPA that is family childcare home approved by me. He joined us at our last meeting for a few minutes. You can get a free consultation, but your CPA is covered right now because you have grant funds if you do. And I've also included a link to a free course online that I went through some of the modules about finance, investing, and just basic money choices. It's offered through CNBC, and it was actually really high quality. And they just send the modules to your email, and you can look at them when you feel like you want to put time towards it. But while you're doing that, if you choose to take that course, what do you need to make sure you do? Because you're spending time for your business, right? Yeah. So if you're making calls to a CPA, you're doing research on finances, even if it overlaps with some of that personal stuff, that's business time. So don't forget that time in your hours too. So I just threw a whirlwind of information at you, but know that I'm going to send all of you that are at the association meeting too, the email. So you're going to get the to-do list that puts all these in order of some steps to look at them. You're going to get the PowerPoint with all of the resources, and you'll also get a copy of the financial resiliency piece that I know y'all got in person. But does anyone have any last questions before we part for the day?
Opening an IRA or Roth anywhere, I mean, it doesn't matter, any financial institution.
You certainly can. And I included the 3 that Tom says go to first. And I think his reasoning for that is because you can do them from just about anywhere. They're pretty simple to use and set up, and their fees are low or zero. But beyond that, if there is a connection somewhere else that makes sense for you, it wouldn't be a use them or don't use them, other than I always recommend looking, if you're looking at a new company or something that's offered online that you've never used, always do a little research on what their reviews are like and what their ratings are before just jumping in with an account. And do know if anybody has questions, you all know where to find me. I'll be emailing you, but my cell phone number is always in my email too. And for those of you who are online virtually with us, I'm going to share my screen for a moment so that you're able to access, I'll put it in the chat too, the evaluation for you to get your certificates. I will say, my chat go up here. Let me move this over here to get this in the chat box for you.
If anybody doesn't want to do the evaluation now, let me know and I'll email you the link and you can do it. You want me to, I'm sure. Anybody else want the QR code?
So I'm going to put this in the chat box. That might be easier too. Just be aware that when you do this, you will, and I'm looking at some of the questions here in just a second. So I put the link in the chat for the evaluation. When you enter everything, you're going to have a button or 2 there at the end before you ever get to where the certificate is. But your certificate for clock hours for the session pops up at the very end. You'll also get an auto email to the email address that you put in that will include the certificate as well. It'll look a little wonky, but you can save it through your email. You can save it when it's at the very end of the evaluation. And if you have any issues, just email me or respond back to the one I'm sending y'all and we'll help you get it figured out. So I'm going to look real quick, and y'all can consider us as being wrapped up. And I want to give a major thank you for everybody that showed up. And I'm going to touch on some of the questions that came up in the chat if anybody's interested in just still listening to that be addressed. But feel free to do your thing, or I don't want to keep the association from moving on with your day either.
I think everything's done because we're going to do a few things here. Okay, all good?
Yeah.
Okay, thank you so much.
Thank you. Love y'all. I'll see you in person next time.
Thanks, Ashley. Oh.